David Tice, Chief Portfolio Strategist for Bear Markets at Federated Investors. Good to see you, David. You just heard Dr. Doom there talking about, I guess we're still seeing some issues in the economy, but you're saying we're going from bubble to bubble.
Exactly. Well, Stephen Roach, I think, first coined that from Morgan Stanley, calling it rolling bubbles. And we've talked about this for the last 10 years, where essentially credit has created growth in this economy. And in the Keynesian monetarist theory, it's been debt growth that's generated growth. So we had the internet bubble, we had the telecom bubble, we had the big decline 00 to 02. So Greenspan cut interest rates. Bush came on TV, encouraged people to go out and go shopping, take a vacation. Bob McTeer said everything will be all right if we all hold hands and buy a new SUV. So we created a mortgage finance bubble. That was followed by a corporate finance bubble. And now we have a government finance bubble.
Okay, well, maybe they're holding hands in fear these days. David, let me ask you, though, about what's taking place in the markets. If we had that rally during this bear market, is that rally over? Timing has never been our forte, Susan, but I do believe we got up to about 1220. There was a lot of resistance there. We aren't huge technicians, but the sentiment got very, very favorable. We retraced about 62% of the prior decline. People got very optimistic. Bears were very low. Mutual fund cash is very low. And frankly, we've taken away the Federal Reserve quantitative easing, buying mortgage-backed securities. The Chinese are slowing down growth, and we have massive sovereign debt problems across the world. Okay, well, that seems to be a very pessimistic picture then, David. So what happens from here on?
We believe this market is going to go lower. We think this last 15 months is a dramatic 80% decline. Rally in the indices has just been a reflex rally. It's really been an echo bubble, as Chancellor has talked about from the UK. Now that echo bubble is about over, we're going to resume the bear market. And unfortunately, it's going to be even more painful this next time.
Why is it going to be more painful this next time? Because what, you don't have the stimulus coming from the governments this time around?
Well, I think people are going to realize that governments are not going to be able to be there to bring it back. It's kind of like believing in the tooth fairy. I mean, since 1982, it's made sense to jump back in the market. Once the economy comes down, the Fed's cut interest rates, the markets come back, everybody believes. This next time, I think we're going to have less ammunition from the Fed because our massive debts, this next time there's going to be doubt existing for sovereign debt, and interest rates are going to go higher. They're going to go higher around the world.
Okay, so what do you do amidst all this doom and gloom, David? Do you, like other investors, run to safety at this point?
I'm advising people to, one, invest in education. Don't just listen to me, but read the bear case. We have some great commentary at prudentbear.com. There's some great literature out there from various pundits that will tell you, and we also believe strongly in the Austrian School of Economics, Ludwig von Mises Institute, Mises.org. And once you do that, you're going to be less optimistic than the consensus. You will probably sell some stocks. You will also hold gold and precious metals because it will protect you against a fiat currency world.
Okay, well, David, let me quickly ask you, 40 seconds here. You're paid to handle your clients' money, and what are you doing with the cash right now?
Well, I'm a strategist now, so I've kind of been kicked upstairs. I've talked to the team at Federated in Pittsburgh. We are short the market. We are short indices as well as individual common stocks. We are also long precious metals equities because we believe we possess a skill set there, and it can offset some of the losses that we might face in a rally. And we think gold is going to do very, very well in this next decline.
Okay, David, thanks for dropping by. That's David Tice of Federated Investors.